another major hurdle for home buyers is high mortgage rates. The 30-year fixed currently sitting at 7.22%. And with the odds of a rate cut being largely pushed back to September and maybe even beyond, depending upon who you ask, buyers are surely wondering when they might see some relief with mortgages. For more on this, let's turn to Lawrence Yun, National Association of Realtors Chief Economist, good friend of the show here. Lawrence, always a pleasure to speak with you. You know, just as we think about the broader housing environment right now and what you're seeing show up in the data, what is really at play here? Are we going to see this scenario continue to play out until rate cuts come into the picture? And what is your best guess for when we might see that?
Well, thank you for having me on the show. The most interesting situation from my perspective at the moment is that we have very high mortgage rates, 7.2, 7.3% rate. Despite that, multiple offers are still happening. The buyers are in the marketplace. It's simply that there is not enough supply to fully satisfy the market. Now, of course, there are some home buyers who simply cannot get into the market at the current rates, so they are looking for better affordability when the mortgage rate decline. I do believe that later this year, the Federal Reserve will be cutting rates, which will help the 30-year fixed rate mortgage. But let's look at the longer term. Whatever rate cut the Federal Reserve is delaying this year will simply get pushed into next year. So I think from the U.S. economy, we are looking at maybe 6 to 8 rounds of rate cuts all the way through 2025, which means that mortgage rate will surely be lower over this time span. And people buy a home, and we know from past experience, people always refinance when the mortgage rate decline.
Multiple offers still happening, Lawrence, as you mentioned, but at what socioeconomic class is that more outsized from what you're seeing?
The cash transaction has really risen. Maybe, people are saying, I don't need mortgages. Mortgage rates are not important. Part is that homeowners have built sizable housing wealth in recent years, and especially who are moving to more affordable regions, whether it is from, say, inner suburbs of a major city going into the next county where things are a little more affordable, or in some cases, people moving from expensive states, say California to Nevada, and they can buy all cash. So we have seen a notable increase in the all cash transaction. But let's remember, the first generation buyer, first time home buyers, they're not cash buyers unless their family can help them out. So most first generation, first time buyer, they need the mortgages. They're looking for more inventory. Perhaps it will begin to show a little later. Builders are ramping up production. Now, new home construction is not for the first-time buyer, but at least it provides some trade-up opportunity among existing homeowners who will then release their starter homes onto the market.
And when the Fed does begin cutting rates and they perhaps get in not just a single one-off instance of a cut, but perhaps a few cuts come forward, what type of rush to refinancing do you expect to happen?
The refinancing always very sensitive to rate changes. But I think what is key is that we know we are going to have more buyers when the rates decline. That's almost a certainty. The key question is whether we will have adequate supply to meet that demand. And I think that some of the current homeowners who are in so-called golden handcuffs, that is to say that they are loving their previously obtained mortgages, 3%, 4%, they don't want to give that up. But we know that there are life-changing circumstances, having additional child in the family. Maybe there is some new job at different town, or maybe they were looking for a better school district. So all this more life-changing, big decision impact, I think people will begin to list their property, look for their next home. So as a consumer, be on the lookout for more listing as we proceed through the year.
I saw a stat about the number of millennials turning 40 every day here, and it was eye-popping here, Lawrence. And a lot of millennials are having those key life decisions and changes happening right now, which also very much dovetails into the thinking about what the space is that they occupy for home. Do they need to upsize and get ready for more family formation? What more largely are you seeing among that cohort?
The prime home buying age is typically in the early 30s. I mean, that has been pushed back in recent years to about mid 30s or even pushing into the late 30s. So we know that there is a strong desire for that ownership, but perhaps it's been delayed a couple of years because of a higher mortgage rate than what had been previously, lack of inventory condition. But the inventory is clearly turning for more inventory. We are seeing in the data more inventory now compared to 1 year ago. Now, this does not mean that we are in a balanced market. We're simply moving from super tight market to more availability. That's a good trend. And I think this is a very early indicator that the home sales will be pushing higher later in the year. Furthermore, home prices, 90% of the country right now experiencing home price growth.
You know, there have been a few reports that have emerged about another generation, that's Gen Z, about the amount of debt that Gen Z is relying on right now. To what extent are you monitoring that as how it will play into the home ownership scenario for that generation?
The younger generation, trying to understand the importance of financial literacy, get that credit score under check, improve those credit scores, make those rental payments on time, try to save up for down payment, study hard and try to get a job that pays a little higher income. So all that past factors, the traditional way of getting into home, I think is still at play. But of course, there is a larger debt than normal compared to the past generation. So I think that is delaying some of the entry time of the home ownership. But nonetheless, when you look at the data, homeowners, typical wealth, $400,000, typical renters only at $10,000. People know these figures. They want to be on the ownership side, even though it is a delay entry point for Gen Z to come in, but they understand the importance of home ownership.
Lawrence Yun, who is the National Association of Realtors Chief Economist. Lawrence, it's always a pleasure to speak with you and great to get some of your insights. Appreciate it.